You're listening to the Quintessential Podcast, the official podcast of the Quinn Group. Join us as we discuss the latest in legal, accounting, and mergers and acquisitions, helping to provide you with the total solution. Welcome back to episode 6 of the Quintessential Podcast. Today, for the next part of our series, we're talking to our co-founder and director, Michael Quinn, about starting a business in Australia. We've talked about intellectual property considerations, accounting, and record-keeping factors, as well as the benefits of starting an Australian business for those living overseas. Today we're getting right into it again, and we'll be discussing, first of all, expenses and deductions. Welcome again, Michael.
Thanks, Isabel. Yes, in relation to business expenses and deductions, people often ask us what you can generally claim. Well, under the income tax law, a person carrying on a business can generally claim a deduction for expenses incurred in carrying on their business. That is, if you need to spend money for your business, you can usually claim it somehow. But there are some basic rules, and those rules include you must have actually paid or committed to spending the money, and the expense must be related to your business.
Yep.
You must be able to show why you needed to spend the money to carry on your business.
So, is there a list of what you can claim, so to speak?
Well, there's no complete list of what you can claim, Isabel, because what businesses do and how they do it varies. However, within this book, there is a detailed list of expenses that are tax deductible and expenses that aren't tax deductible.
Oh, sure.
It runs for about 10 or 12 pages, actually.
Oh, wow, very extensive.
It is, yeah. So I'd suggest that, clients have a close look at those pages, but you need to think about what you're claiming and whether it is a business expense. So, for example, in this checklist of what can and can't be claimed, the item sunglasses and sunscreen are marked as being tax deductible. However, they're only tax deductible for people that work predominantly outdoors.
Yeah.
So someone like yourself, Isabel, that's working indoors, you can't claim for your business sunscreen or sunglasses.
Oh, that makes a lot of sense. It's a very, very good point. And now, Michael, I'll just mention as well, for those people listening who might not have listened to our previous podcast episodes, the book we've been talking about is The Definitive Guide to Starting a Business in Australia. And that's one you've authored with Julia Karlamova and you of the Quinn Group. So we're talking about specific chapters in this book through this podcast. So that's just a bit of context for those listening. Let's get into it again. So when can you start claiming deductions? Is there like a time frame or anything like that?
Well, it's normally easy to identify when your business started. So when your business started, you normally start paying for expenses, and as long as they're business related, you can claim them. But that's not always the case. In some cases, you can actually form a company and register for business and not pay for some expenses for some time.
Yep.
Alternatively, you may actually pay for some expenses and then wait 3 or 4 months before you actually form a company and register with the relevant tax authorities.
Right.
So it's not always black and white.
Yeah. So what about work expenses? What's the requirements? What are the substantiation requirements for work expenses?
You need written evidence to ensure that you can claim your work expenses.
Yeah.
And written evidence is a document obtained from the supplier of the goods or services which contains certain information. The supplier's document, for example, a receipt, an invoice or a statement, must set out the name of the supplier, the amount of the expense, the nature of the goods or services supplied, the date the expense was incurred, and the date of the actual document itself. This is all subject to 2 exceptions. The if the supplier's document doesn't show the date the expense was incurred, then the taxpayer must use other independent evidence, such as a bank statement, to show when the expense was paid.
Yep.
Or if the supplier's document does not specify the nature of the goods or services, for example, a credit card receipt, the taxpayer may add that information to the document before lodging his or her income tax return.
Okay, that makes a lot of sense as well.
Also, the requirement to obtain a document from the supplier does not apply if the expense is $10 or less,
Okay.
and the total of all such expenses is $200 or less. In those sorts of cases, the taxpayer may instead make a record of the expense in a diary, as a diary note or similar.
All right, so let's get on to something now. Entertainment expenses, Michael. So what can you claim in regards to entertainment for your new business that you've just started?
Well, entertainment expenses, Isabel, is a very interesting one, because you have limited deduction. They're only deductible in very limited circumstances.
Yeah.
Common examples of entertainment are business lunches, tickets to sporting events or theatres, sightseeing and so on. Entertainment can also cover accommodation or travel associated with any of these items. So in these situations, the prohibition that you can't claim the expense applies no matter who the recipients of the entertainment are, and irrespective of whether there is a genuine connection with business activities.
Okay, sure.
So the Commissioner of Taxation has actually issued a ruling setting out his views on the factors to be taken into account in determining whether the provision of food and drink constitutes entertainment.
Sure.
So you need to have a look at that ruling. Alternatively, you need to give us a call and we can provide you with an overview via one of our fact sheets which summarises that ruling as to what you can and can't claim. Entertainment expenses are different to seminars, for example. That prohibition, or the general prohibition, entertainment not being deductible, that doesn't apply to the cost of food or drink or accommodation of travel that's reasonably incidental to a person's attendance at a seminar which lasts for at least 4 hours.
Oh, sure. All right, so we've covered entertainment expenses. Now a very common one we get a lot of our clients asking about are the travel and motor vehicle expenses. Could you give us just a very brief overview, Michael, of the travel expenses and whether you can claim them and not, vice versa?
So, Isabel, you can claim travel expenses directly connected with your work. If your travel is partly private and partly for work, you can claim only the part that relates to work. Travel expenses that you may be able to claim include meals, accommodation and incidental expenses incurred while travelling overnight for work. For example, going to an interstate work conference. Generally, if your travel does not involve an overnight stay, you cannot claim for meals even if you received a travel allowance.
Sure.
Other travel expenses that you may be able to claim include airfare, bus fare, train fare, tram and taxi fares, bridge and road tolls, parking and car hire fees.
Sure thing.
Yeah, you can't claim a deduction for any expenses you incur for the direct operation of a car that your employer provides because you don't actually pay for those expenses. And you can't claim the cost of normal trips between home and work, as that expense is private.
Yeah, that does make a lot of sense there. Okay, so we've covered a few expenses there, Michael. We go more in depth into that in the book that you've written. So how about we now talk about taxation for businesses, something that's very, very important for any new business. I guess one of the most important ones would be Goods and Services Tax, or GST. Could you, I think in your book you provide a 10-point guide to GST. Would you just delve into that a bit deeper for us?
Well, there's certain things that you need to know about Goods and Services Tax, commonly referred to as GST, Isabel. You need to understand what a GST liability is, getting credits for GST. The burden on the end consumer rests with the end consumer, so the end consumer is basically paying the GST. You must register for GST, and most business entities have to register for GST unless their turnover is less than $75,000 per annum.
Yep.
You have to lodge a business activity statement known as a BAS, either quarterly or monthly, depending on your turnover.
Yep.
And you have to advise the accounting basis on which you're lodging that return, because you can account for GST either on the cash basis of accounting or on the accruals basis of accounting.
Sure.
There are certain GST exemptions that you need to know about. You need to also know what the term input tax supplies are, and there are obviously, with any tax there are special rules, and those rules apply to a wide range of items, including charities and non-profit bodies, GST groups and joint ventures, financial supplies, superannuation funds, insurance, vehicles, real property. The list goes on.
Yeah.
So it's a federal tax.
Yep.
And it's a very important tax. And normally GST registration happens when you form a new business.
Sure. So another tax is Fringe Benefits Tax, or FBT, as we like to have the acronym. So could you go into that as well a bit, Michael? What are the general criteria for fringe benefits, and what is it?
Sure, Isabel. It's another federal tax, and it's imposed only upon employers. It's a separate tax from income tax, and it's paid on certain benefits employers provide to their employees or their employees' associates, which are typically family members,
Yeah.
in place of or in addition to their salaries and wages.
Sure.
Okay. It also applies in circumstances where the benefits are provided by an associate of the employer or by another person by arrangement with the employer or associate.
Sure.
So the Commissioner has adopted a very broad interpretation of what is an arrangement. In all cases, however, the employer is liable for the tax.
Sure.
Because it's a tax quite separate from income tax, FBT is payable regardless of the income tax position of the employer. So, for example, loss companies and non-resident employers are exempt from Australian tax under the provision of the double tax agreement negotiated with the Australian government.
Sure.
But that doesn't give them exemption for payment of FBT.
Sure thing. So is there a general criteria for fringe benefits, Michael?
Yes, it arises where the following circumstances exist. That a benefit is provided to an employee, an associate of employee, or some other person at the direction of an employee or an associate of an employee. The benefit is provided by the employee's employer, by an associate of the employer, or by a third party under an arrangement, which we've just talked about, with the employer or with an associate of the employer, and the benefit is provided in respect of the employment of the employee.
Sure thing.
There are certain benefits that are expressly excluded as fringe benefits, and we have those covered in the book.
Yep.
And they include things like salaries and wages, superannuation, benefits under employee share schemes, and payments on termination of employment. There are a few others, but they're covered in the book. Yeah.
Yep.
And there's specific exemptions for certain employers.
Yep.
So religious institutions, international bodies and foreign government representatives and public benevolent institutions generally don't pay fringe benefits tax.
Sure thing. So another tax as well we can talk about today, Michael, is payroll tax. So is that a federal tax as well?
No, it's not, Isabel. It's a state and territory based tax. And in our book, we cover off on payroll tax for each of the states and territories because the thresholds and the amount of tax that's payable, the tax rate in other words, is it differs from state to state.
Sure.
So it's applicable to a business's wages that exceed the threshold applicable in the relevant state or territory. So an employer is required to pay payroll tax on taxable wages above the threshold.
Sure.
So to give you an example, in New South Wales currently, the annual threshold is $1.2 million. So if an employer's salaries and wages and superannuation and contractor payments without exemptions total less than 1.2 million, then no payroll tax is payable. But if they go above the 1.2 million, let's say the total is 1.5 million, then the tax rate in New South Wales is 4.85%. The payroll tax payable for that year would be 4.85% by 300,000, which is the difference between the 1.5 million total and the 1.2 million New South Wales threshold.
Sure.
A big point to note is that payments to contractors are generally subject to payroll tax unless the contractor payments come under one of the exemptions within each state.
Sure,
okay?
sure.
And our book covers that in detail, and it's very important to understand because payroll tax is a tax that initially a business is not subject to, because when you start a business, Isabel, you don't automatically pay wages at the level of $1.2 million a year.
Of course.
You might start with 1 or 2 employees and you will be well below that threshold. But it's important to understand that payroll tax exists as a tax and that there may be circumstances when a business ramps up very quickly and then has a payroll tax liability.
Sure. I say thank you for joining us for the last few episodes of the podcast as we've delved into starting a business in Australia and all the steps involved. Would you just enlighten everyone how we can go about getting a copy of this book if we'd like to have a read? I understand we do a consultation with our clients who want to start a business where we provide a copy of this book.
Yes, we do. We work through the book with potential new clients, Isabel, and there's a small fee for doing that, but it's certainly money well spent, quite frankly. You can contact us at info@quinns.com.au. You can also contact us on the Sydney number, which is 0292239166, or alternatively the 1300 number, 1300 Quinns. But yes, by all means get in contact, and we'd be very happy to help you out in starting a business in Australia, whether you're from within Australia or from overseas.
Wonderful. Well, thank you again, and we'll see everyone next time on the Quintessential Podcast. Bye for now.